Hey folks, Monday, 28th of November 2022, and what we've seen out of China over the weekend and indeed overnight is a huge amount of protests against the COVID zero policy. Further outbreaks as well have been seen of COVID in China, and thus we have seen equities selling down, bonds gap up as well. Let's look at oil, S&P. And then we're going to actually look at the oil, S&P, and actually we'll look at probably a little bit of Bitcoin here as well. So starting off with oil, you can see we are absolutely hammered here down. And why is that? Well, we were talking about this in the EU session, and really, we can kind of see that we've really sold down. We've kind of breached areas here. We've kind of breached sort of supports that we're seeing in and around 81s, and we're moving further down to here. We're breaching the September lows as well. And the easiest way to look at this is really that, we're a bit up. We came into the Russian invasion of Ukraine here. We then bid up on this contract into new highs around the 118s, back adjusted here onto the Jan. We're looking at the Jan 23 contract here, and then came back down. Now, we're bid up. SPR release was, of course, in here. Biden releasing a huge amount of oil from the strategic petroleum reserves. Down we come. Then the rhetoric from IEA was that Russia was going to really have curtailed oil production because of this, and we bid back up to the highs. And then really it came out that Russia, and it is now as well the case, that Russia is actually producing and selling more oil than it was pre-invasion. And so down we come, okay? So, all the experts in the market have been trying to nail this one really, from Daniel Jurgens, boys and girls at HFI Research, to, Javier Blas, to lots of people, just trying to make sense of oil, selling down while we have, hugely depleted oil stocks at the petroleum reserves in the US and globally. All right. So ultimately, you got to trade what's happening. And what's happening is we are blowing through supports around 81s and 80s here. Okay. Right. We're blowing through that. And really, we got to come down to the October highs here around 69s. And for me, gasp, shock, horror, I think we have to come back to 59s to pick up the real buyers. All right, the 59s down here. All right, now that might be hugely insane basically, but that's just what I see technically, and that's the edge we trade here in Duggan Capital on the team. All right, so we're looking at 59s for the major supports, and then we can maybe look for further upside. But until then, we are weak. Notwithstanding headline risk. All right, that's oil. We'll just put these supports on. Another case as well, we breached the supply and demand. We saw great demand coming in this area last week, based on that New York Times article that OPEC was to produce or lift production by 500,000 barrels a day. Article was rewound by Saudi OPEC ministers, and then back up we go. But then we're selling back down through that area. So it's demand turning into supply. So really, it's going to be 72 82s and then 70 34s to the downside targets for me on oil stuff. How would I be making that trade? Well, I'd actually be probably looking to sell actually the 77s today, looking at 77s, and then look for new lows on oil over the rest of the week. All right, so that's oil. Looking at the S&P, well, overnight we have this gap down here on the S&P. We haven't even been able to limp our way back to that 40-21s gap low, 21's half to be precise. And I think we need to come back to the 39.60s, even 55s area here to pick up some bars. 20 EMA, daily EMA is below at 39.31s. I like that. And if we shift to the daily bars, you'll see why I like that, because essentially we were looking at this. Let's just go back to, the screen here. Hold on a sec. We were looking at the breakout and buying this breakout here on the SPOOs to the upside into the 4036s, pulling back now is going to be into that area. I'm talking about the 39.55s or 60s here, and then look for continuation and then back up. And I think if we are going to then resume the bear trend, it's going to be from 41.20s or somewhere up around here, because this is what the daily looks like. Okay, this is what it looks like. Yeah, we zoom all the way in there and we see this is where we want to be seller, and potentially holding a position short there for the medium term. All right, so until then, I'm not really too afraid of what these markets are going to do. I could be totally wrong, notwithstanding headline risk. But we do have a Fed that's turning to softening now from 75 basis point hikes to probably 50 basis point hike in the December 6th meeting, I think it is. I think OPEC December 4th and FOMC 6th. Have to confirm that though, but yeah, that's what I'm looking at on SPOOs. All right, and then let's look at Bitcoin here, because quite a bit of chat about Bitcoin this morning. People calling me out on YouTube, and I'm really happy about that as well. But ultimately, in the day trade space, I think we need to sell this thing down to 13,920s and then pick up some buyers 13,920s and have a decent rally from there. But until then, I'd also be seller at 17,568s as well. Probably a pullback to the 16,510s for the day trade. Shorting that would be pretty nice. But if we kind of push even 10, well, maybe 20, 30, $40 higher than that, I don't think I like it. But I think sellers will come in 16,510s and sell this thing down to new lows on the month actually. But yeah, that's kind of what I see. On the bigger boy chart for Bitcoin on the spot rate, really this is the shape of it all on the weekly bars, right? Make this big old chart here. Yeah, I mean, I just think we need to trade back to the range high on the 23rd of June, the week of the 23rd of June 2019. Is going to find some supports, but medium to long term, I think we're going to fall into this range and trade this range. And I think ultimately buyers that will bring us to say 80, 90, 100,000 the Bitcoin are actually going to be buyers of 5,800. And that's kind of what I think about crypto. I think tiering in dollar cost averaging from here down to 5.8, it would be a nice idea if you want to do that. I mean, martingaling that sort of a trade, it's a big risk profile. You really want to be not doing that leveraged. But this is not trading or investment advice. Either which way, I like this range to pick up buyers and then look for getting back into what has been a bear flag here that we broke down from. Okay, all right, that's it for me for another pre-US session. Hopefully everyone's teeing up to have a good day today. I think there's going to be better trading days to come during the week, and enjoy. All right, take care.